Tax year end is fast approaching, so it's an important time to look at your finances. You may even be able to reduce your 2020-21 tax bill by making the most of your current allowances and tax reliefs. To help, here's our 6 top tips on what you can do ahead of the 5th of April deadline to make the most of your finances. They're all fairly simple, but please leave yourself enough time to get them through before the deadline. Our first top tip is, check to see if you can top up your pension contributions. Many people can benefit from tax relief on pension contributions equivalent to as much as 100% of their taxable earnings. Annual allowance limits can complicate the picture, however, so it's best to seek advice to maximise this tax relief. To do so, you can speak to a financial advisor, and you can find one near you on the Unbiased website. Number 2, use up your full Icer allowance. You can save up to £20,000 tax-free in an Icer in 2020-21, so make the most of any leftover Icer allowance before you lose it on the 6th of April. What kind of Icers you choose and how you share your allowance among them is really up to you. You can go for any combination of cash, stocks and shares or alternative finance Icers to suit you. Number 3, maximise your tax-free personal allowance. Higher earners have their personal allowance reduced by £1 for every £2 of adjusted net income over £100,000. There's no allowance left for those with income above £125,000. But it may be possible to reclaim some or all of it by using excess income to make a personal pension contribution, which will attract tax relief too. For more information, read up on the retirement basics, like tax in retirement. Number 4, make use of the marriage allowance. You could reduce your income tax bill by up to £250 for 2020-21 by sharing some of your personal allowance with your partner. The marriage allowance applies to married couples and civil partnerships in which one is a non-taxpayer and the other a basic rate taxpayer. Consider claiming it if one of you has very little or no taxable income. You can find out more on the government website. Number 5, get tax relief on gift aid donations. We all like to make a charitable donation, and if you pay enough tax, you can choose to donate to charity through gift aid. Your chosen cause will receive an extra 25p for every £1 you give, which can make a huge difference to them and your finances. Higher and additional rate taxpayers can get tax relief on grossed up donations at the rate of either 20% or 25%, the difference between your rate and the basic rate applied to the donation. And finally, number 6, check your child benefit status. If you have children, it's important to check your child benefit status. The high income child benefit tax charge comes into effect if your adjusted net income, your income before personal allowances and after certain tax reliefs is above £50,000, and you or your partner receive child benefit. Check to see if increasing your pension contributions would reduce your adjusted net income to below this threshold, letting you keep the full amount of your child benefit you receive. So that's our top tips. I hope they help you. You can also find out more about how you can maximise your tax year end position by visiting our website.